is a declining dollar actually causing the stock market to go higher? After all, the stock market recently hit a brand new record at the same time that the dollar fell to its weakest level in roughly 3.5 years. So they have to be connected, right? Wrong. Didn't expect me to say that, did you? So here's the thing, when you look at the dollar's value throughout the last 50 years, you'll notice some pretty wild swings. Like, it depreciated from 2002 to 12, and then it appreciated through the 2010s, all during a time where the markets went up and down and back up again, effectively showing no correlation between the two whatsoever. Fisher Investments also analyzed this phenomenon going all the way back to the 1970s when the dollar was taken off the gold standard. And wouldn't you know it, they found that the correlation between the trade-weighted dollar index and the S&P 500 returns is only about 0.15, which is essentially zero. On top of that, they also found that global stocks were up 76% of the time, whether the dollar was rising or falling. Of course, that's not to say that the dollar can't have some impact on the stock market short term, although all of the data says that the dollar's movements do not have any reliable indicator of whether the stock market goes up or down. But what about inflation? Surely that has to impact the stock market, right? Well, to a certain degree, yes, inflation can be factored into the price that you pay for stocks. But when you really begin to nail down the data, it appears as though there is no direct correlation between more money printing into the economy and higher stock market prices. Like, as Ben Carlson from a Wealth of Common Sense blog points out, this could be because the stock market is supposed to be forward-looking and inflation involves backward-looking data. But even if you did some sort of look ahead, there's nothing there. This all suggests that the stock market is genuinely expanding. It's actually boosting purchasing power, and it's fueled by good earnings and liquidity, not necessarily excess money printing. Now sure, some people could argue that more money printed gives people more purchasing power, which helps boost companies' profits and helps boost stock prices. But it's not the money printing itself that's causing the stock market to go higher, if that makes sense. So what's really impacting the value of the dollar, and in turn, the value of the entire stock market? Well, in terms of the US dollar, I hate to say it, but that answer is pretty simple.